Are you a SaaS startup looking to expand globally and drive growth? If you're based outside the US, is market entry into the US key to your success? To discuss the US market entry strategy for SaaS startups, I have with me today Raj Patil, Chief Executive, Orion Innovation, based in the US. Raj, welcome to the Future of SaaS series.
Thanks, Thomas. Good to be here.
Yeah, great. So, Raj, one of the big challenges that a lot of SaaS founders have is, how do they really enter the US market? And if you look at the pre-pandemic days, when SaaS companies had raised, had done a capital raise, they would typically, look at, coming and attending a lot of trade shows, conferences, making their presence felt, and perhaps also get one of the co-founders to relocate to the US, right? Now, a lot of companies have, of course, they perhaps a few other things as well that many of these companies do, but and maybe some of them meet with success, but I guess a lot of them end up burning a lot of cash, and at the end of the day, they're sort of uncertain about their strategy and the opportunity. And linked to this is really a very basic concept, which is product market fit, which is something that a lot of startups tend to take a bit lightly. Sometimes it's sort of a hit and miss approach. So what do you think, Raj, are some of the fundamentals of a product market fit that SaaS startups should actually look out for? And what would be the process of actually doing that in a cost-effective market for the US business?
Right. Yeah, look, I mean, obviously that's an important starting point. But before we get into specifics of that, in general, to me, I think a very important thing to keep in mind is one size doesn't fit all, right? So there is no necessarily cookie cutter approach that one should assume will always work. That's part A. Part B is, while the U.S. market is big and not only volume but from a dollar standpoint, it has to be a commitment, right? It's a sustained commitment. You can't be in and out and sort of burn heavy and then nothing happened and so we'll go back. So just a background, I think one size doesn't fit all, and then it's a sustained effort. Having said that, where do you place your bets, right? Where do you invest your dollars? I think is probably more important. That's your question. So going back to the product market fit, to me, I think the first thing is assuming these startups that we're talking to, have been successful in a certain market. Let's say India as a market. So the first thing is assuming that can be translated is not the right assumption, right? Though it may be the same industry, same problem you're trying to solve, but you cannot just translate it. So the first thing to do is I would start with what problems have been solved back in India, let's say, for a minute. Distill that and say, is that problem big enough? Is it important enough for people? Are they looking for an answer? So start with that. And then I think it becomes super important to take the entire market and boil it down, right? What size of companies? Do you go to the really large? Do you go to the mid-size? Do you go to the small? So I think identifying that. So it's all about, I think, keep cutting it to a certain set. And then we'll come to how to get to those companies. But I think first, those are some of the things that I would spend a lot of time on.
Right. No, I think that sort of makes a lot of sense because I personally know of quite a few founders who've burned a lot of cash, and they haven't really taken a very structured approach. So really, okay, and you did touch upon market segmentation. Now the market is really massive in the US, and therefore often it could be very overwhelming for a founder. So, how do they really prioritize the right market segment, and within the segment, the right type of customer as well? And this is sort of real basic stuff, that we all, have learned in B school, like, marketing 101 typically. But, I think it's very difficult to execute. So what would be your guidance? And is there some kind of a playbook that, founders could use to really identify the right kind of buyer?
Yeah. Obviously, that's a multi-dimensional thing, right? A lot of factors in identifying that. To me, first, obviously, assuming it's a industry vertical, right? Uh, Typically, the highest chances are if you talk about a specific domain and a problem, as opposed to, unless it's a very horizontal, then we'll come to that. But assuming it is solving a specific problem for a certain industry. So staying true to that. So that's one. Then is the size of companies that are the most receptive to this, because there is a certain buying pattern as well. With really large companies, it's a long sales cycle. You need to go through multiple layers, etc. So sometimes it's also easy. You got to look at the ease of entry, right? So size of the company, buying pattern. Always think outside in as opposed to inside out, right? Somebody making a decision. And then third, I think a lot of us underplay the geography within the U.S. I mean, U.S. is a gigantic market, so geography becomes very important, regional geography. So it's okay to just say, I'm going to pick just the Northeast. I'm going to pick 3 states. That way you're also spending your dollars where you'll have the highest impact. So I think those are some of the things that I would pick. So start thinking outside in, right? As to ease of buying, is it the right vertical or the type of company to solve the problem? Can you get to the decision maker, right? In a small company, large company, sometimes it's hard. And then geography.
Yeah. So I think, so I've been talking to quite a few SaaS startups looking to enter the US. And, one of the things that they're always, looking for is how do we get some initial pilots going? And that's a big challenge. And for these pilots, should we, take a partnership route to get something, or should we, I mean, really, it's a big conundrum that founders face. Because very often they don't have the right kind of connections to even find a company who might be interested in that. So how do you really what could be an approach that people can take, firstly, and secondly, I mean, it's great to do a pilot, but how do you really assess the success of a pilot?
Yeah, absolutely. So assuming you do that second piece that we spoke about is the segmentation, right? It all starts there. So if I have arrived at saying I'm going to focus West Coast or California or just the Northeast, and these are firms that are $1 billion to $3 billion in size, and they have certain buying behavior. So once you have that really identified and very crystal clear on that, I think there are multiple things you need to do to get pilots, right? I would suggest one is, for that set, I think it's super important to get a few industry folks to get attached to your company, right? Sure. And I mean, either as advisors or advisory board, sort of find people who are in that space. And so that's sort of one prong, one of the things for that approach. Then comes, look, there's no compromise to directly calling in, right? And whether you call in, but the calling in can't be somebody on the phone banging away. That doesn't work. People it should be through some connection, somebody. Be prepared to make that call, that 10-minute, 15-minute, get their attention. So I think there are multiple approaches you need to do. And when there is a pilot, set up the criteria. Most companies are happy to do that. Saying, here is the success criteria, right? What would a success look like? The time period. What is the outcome? Set it up front as opposed to figuring it out as we go. And if a opportunity or a potential client does not agree to them, that's not a good use of your time. Walk away.
Absolutely. Yeah, absolutely. Yeah, correct. So the other approach that people are now looking at is also getting into accelerators, and accelerators in the US are notch above accelerators in many other parts of the world. Yeah. So, but again, it's tough because not everybody can get into a good accelerator. But what's your thought around accelerators, and is that a great strategy as well for SaaS companies to look at?
Yeah, depends on the stage the company is at, right? First, I think it is definitely a good strategy. But even in accelerators, there are different levels, different types, different levels of sophistication. I always feel the key on the sort of identifying what's, especially given we're discussing entry here, is the accelerators focus on getting you to the market, as opposed to, I'm assuming the technology is figured out, I'm assuming all of that, is done is really find an accelerator that has truly senior folks who can make those connections. That's the most valuable part, I think.
All right. I guess, to be in the US, you also need to raise a fair amount of money because let's say you're a $1 million revenue, company with an reasonably established product in your home market, and you have an innovation and you can, enter the US. I guess, raising money is again another major criteria because, you really need to think big if you want to be present in the US.
Yeah, and that's the other area, right? Accelerators can help you in all of these. But look, you're right. I think thinking you'll just put a few bucks here or there and see if you get the first one. That's what I was referring to very early on about the sustained thinking. It is expensive. I mean, it's that simple, right?
Correct. Okay, that's right. Okay, so Raj, moving on to building sales capacity. Now, that's again a very critical component, and and very often, I've seen sales leaders or founders move from their home country to the US, and then they actually struggle. So it's really important for you to find, some hard-hitting, sales guys based in the US. So, what should really be the approach? I mean, one is to, look at a senior sales leader. I mean, let's say you're $1 million company in revenue from your home market. You're getting into the US. You've raised a reasonable round, first round in the US. So, do you go for a sales leader route? Do you look for a partnership route? Right? I mean, that's again a low-cost option that you have. So, what would be the ideal formula, or would it be a blend of the two?
Yeah. So, look, assuming you have that some sort of a network, as I said, through either your accelerator or through your advisory or whatever direct connections, assuming that exists and those few doors can be opened just for a conversation, right? That's really step one. To me personally, again, I think I keep saying one size doesn't fit all. Based on the type of SaaS company, you may not want a senior sales leader. What you may want is somebody really high energy, understands sort of almost up and down the stack, can go deep, can dive, can be very responsive to sort of the sales cycle. And the good news is a lot of these are new technologies, so there is a sort of set of people, and this is not about age, but experience level I'm talking about.
Right.
You don't need to have very deep multi-year experience because a lot of these things are new, right?
Yeah.
So my bias would be if you have that, and if you, as you said, have founders who are available to, luckily with COVID now, Zoom is okay, right? Everybody's that's a big deal, by the way. That's a big change that happened.
Yeah.
So I would do the other way initially, but make a commitment, right? That this is an 18-month commitment. Don't expect in 3 months, oh, we didn't get 3 pilots, so pull back. You wasted. It's an 18 months commitment. Put that dollars aside, raise that money, and really go after it.
Right. Great. So thanks so much, Raj, for those insights around a US market entry strategy for SaaS startups. I think it's a great playbook that you've defined for our viewers. And for our viewers, stay tuned to more episodes that we're planning around the market entry strategy, which will help all of us mature our thinking, as we plan to enter the US market. And so watch out for our upcoming series of Future of SaaS with your host, Thomas Abraham.
Thanks, Thomas. Great.